What's up, guys? I am back. Just clean off that screen there. Not even gonna lie, I'm tired today, guys. I'm a little bit tired, but the show must go on. So, welcome to part two of What's the 411. Thank you guys so much for joining me. If you missed the episode that we just had with Nikki Clark, you guys definitely need to head on to the IGTV and check it out. Nikki was dropping gems. And not only am I honored and blessed to have her a part of this show, I was honored to just hear her speak and talk to us about all the different things that she went through. To push herself, to see that vision that she definitely has was phenomenal, just phenomenal to see. So, of course, I'm excited, guys. I'm excited for part two because we had Nikki Moodie on last week and she was giving us some gems, just random gems, because she's just full of information, okay? She's just full of it, okay? She's full of all that great stuff. And so today we're excited. I'm excited to hear all about the financial aspect of certain things because we need answers, especially because you know, in our communities, we always don't know the answers to all of these questions, that we may have when it comes to financial literacy. And more, we're seeing that word financial literacy being spoken about more. We're seeing that come up in our kids' education. They're starting to talk about teaching our children financial literacy in school. We're starting to talk about financial and generational wealth. All of these terms are important to know, but also how we can apply them to our own personal lives. So Nikki Moodie has all the answers. She's got all of it, and we're excited to hear from her. Hey, Nikki. I
Hi,
am
how
good.
are
How are you?
you? I'm good, girl. It's Monday. Let's get this week started.
Right? It's the end of the month. It's done. Like finished.
Listen, end of the month, beginning of the week. I don't know what to do with myself. Like, I really don't. I feel like I was a little bit lost. I'm not gonna lie. Today started off a little bit kind of awkward, but I'm here. I'm present. I'm doing the best that I can, and
Yep,
that's all I
for
can do.
real, for real. So we had you on last week, but introduce yourself again. Just talk to us a little bit about who you are, and what it is that you do on the financial aspect of it.
Yeah, so my name is Nikki and I'm a financial advisor, but I like to be known as a coach or mentor, planning your finances because that's what I do best. My company is called the Higher Heights Experience. And essentially, what I do is I help people either build financial freedom or generational wealth. So I understand that these are two things that go hand in hand where our culture speaks highly of it, but we don't really understand, I think, how to actually achieve it. So I really focus on one, helping people to achieve financial freedom by looking at your debt, getting rid of that, managing that, eliminating it, saving some money, saving some for some emergency funds, and as well as then building generational wealth because you can't do that until you're financially free. So it's a long process, a long journey, but I tell them they have me for life, so they're stuck with me. And
All right, that sounds
yeah.
good. Sounds good. So, when did you first realize like you had this passion for helping people when it comes to their finances?
Okay, so the story behind that, essentially what it was is I had the opportunity to be hired as adult educator. So I work at Centennial College and I'm over there teaching special events operation because that is my background, the hospitality industry. And when I quit my job back in 2019, just cold turkey, gave them 6 weeks, said, y'all got to figure it out. I can't do this anymore. Um, Luckily enough, with my big mouth, I went on LinkedIn, told the whole world I had no idea how I was going to feed my kids. And then I was approached by the chair who then offered me a job as a teacher. So it was teaching that element really put a lot of things into perspective for me where I was giving back. And then I ended up switching my advisor at the time. And she was like, which is Harpreet, she was like, hey girl, you ever thought about doing finance? I'm like, no, I'm good. And usually I jump on everything, but that one I was like, no, I'm okay. And then she asked me again. And then that's when I was like, you know what? Fine. Let's just do this. let's just go ahead and do this. And literally, that's what I call my 19 years of fight. Because it took me 19 years from the moment I ran away from home to really understand what it takes to build a financial legacy here in Canada. And now I am on the path of doing so and showing people in the process as
Wow.
well. So, yeah.
And that's important. And when you had just first came on, you were talking about like generational wealth, financial literacy, all of that good stuff. You know that we're hearing so much
Mhm.
conversation about right now, but it's like, do we really even know what those terms mean? So could you like break it down a bit for
Yes.
us?
Absolutely, it's what I love to do. Um, so I like to look at things from a six-step process when in terms of understanding what it takes to build your actual legacy. So you got to first look at your cash flow, what's coming in, what's going out. That really helps determine if you can work towards any financial goals, whether that's eliminating debt or increasing your income, or perhaps you want to work towards retirement or even get life insurance, critical insurance. But in order for us to really be able to assess if you can do that, your cash flow really determines like what is it that can you actually do. And this is really huge for us because when it comes to life insurance, we really use somebody's cash flow to determine the affordability for insurance is affordable. What I do like about, I'm associated with our World Financial Group. I work with them, and I get the opportunity to have access to all these different providers with all these amazing products. So I can actually really dig deep down and pretty much find insurance that actually works best for individuals in three different tiers. So I find the one that's really expensive, of course, the sandwich approach, and the one where, essentially it's going to be able to cover you for the time being, but that's just so we can build you to where you need to be. And then essentially, people talk often about, well, I want to increase my income, but then we find out that when you do so, you end up paying more taxes because you tackle on a second job or a third job. So this is where I really encourage people to start a business. Start a business if you had a passion, in terms of what you wanted to do. The only thing you really lose is time, essentially. But even with starting a business, you can do taxes on things that you use every day, whether that's your cell phone, your laptop, your internet. So there's really benefits to increasing your stream and starting a business. It's not easy, of course, but thank God, that's what I do. On the other side of things is I help people start a business and be able to maintain it. So that's the first step, is looking at your cash flow. The second step would be to then eliminate debt. So when we first meet, essentially how I figure out your cash flow is we do a financial needs analysis, and that gives everything. So what's coming in, what's going out, your savings, your debt. Do you have any retirement set up? Are you working towards, preserving your wealth? What does that look like? Your mortgage, X, Y, and Z. And based off of what you have in terms of debt, that essentially is the plan that's put in place to say, okay, how are we going to eliminate that? And we can do it on different ways, right? You can use a budget and you can say, okay, I owe this amount of money, and set a SMART goal. So I'm going to ensure that this debt is paid every single month, bi-weekly. This is the amount for X amount of time. So this provider until it's paid off in that duration of time. So that's really a commitment, really to say, okay, I'm going to get rid of that debt. Or depending on what it looks like, and that's why everybody's situation is different, you do have the opportunity to look at doing a consumer proposal or consolidating your debt. So essentially, consolidating your debt just means that everything gets brought into one, and you just pay one interest amount versus like all these different loans, all these interest amounts. Or you look at consumer proposal, where once again it brings everything together, but it also reduces the amount, right? And they don't like to classify it as one level up from bankruptcy, and it's not bankruptcy, but it's 10 times better than bankruptcy. And that is the part where nobody speaks to people about. Nobody doesn't really speak about consumer proposals. You either hear bankruptcy or consolidating your loans, but a lot of people are doing consumer proposals. Consumer proposals are great They do take a hit off of your credit score, but essentially, if you have debt, your credit score means nothing. That's one thing I always tell people, like, great if you have a really high credit score, but if you, for whatever reason, get dinged with that debt that's sitting there, even if it could be a student loan and you have interest relief, the minute anything happens, that's going to hit your credit score, and that means nothing, right? So we really have to focus on making sure we're eliminating that. So your cash flow, getting rid of any debt, and the next thing up would be your emergency fund. So you got to have your emergency fund in order, because if we start working on getting rid of all of your debt now and something unexpected happens, you're going to dip back down into the same debt, which is a credit card perhaps that you just paid off. So when you have your own cushion and your own money, you're more inclined to touch your own money and replenish that on your own terms versus using any credit. So when I do my illustrations, those are the first three things that I mentioned. And I say, essentially, if you work on that, you're pretty much looking at, one step closer to becoming financially free. So the other sides, I won't go into them too much, but then you have investments. So you can look at doing your investments. Getting protected is a huge one, because if you decide to make the commitment that I'm now going to do this great endeavor of getting rid of my finances, then unfortunately you're more dead than you're alive. So you're committing to saying, I want to do better for my family. And, if you pass away and you have $1 million policy, your family gets that $1 million tax free. So this is what we're trying to say, where, getting life insurance is not a bad thing. As I said, it depends on everybody's situation. You could be set up for a term, but it's convertible to permanent, meaning that at least your health is locked in, right? If you do decide to do, for example, term insurance, and I can get into the two differences, you're only renting it. It's literally like renting a home. It's not yours. Once it expires, that is it. But the only thing that sucks about it is that if you were to go up for renewal, it'd be based on your age. So obviously, the older you are in age, the higher it is for insurance, because it's a risk the company is going to take when it comes to really being able to insure you. So, and let alone I'd even talk about retirement yet, because that is, I know it's like steps to this, but you got to just take baby steps. And then essentially, once you do that, you're looking at building your wealth, so compounding your money, outweighing inflation, investing, and then preserving your wealth, which would be looking at what assets you have and making sure that you have a will so that everything can just get passed down seamlessly to your family. So that's like the overall steps of how to build generational wealth. When we talk about the building blocks to financial freedom, it would be to get insured, get rid of your debt, save, and invest. So those are the 4 ways that you can have financial freedom.
Wow.
So it's a lot, I know, but that's why you have to have a plan in place. And honestly, you do live your best life when you have a plan in place. Because when you are unwillingly or unconsciously just living a life and you're not intentionally saving or investing or looking out for your future, yes, it's actually causing you more harm than good. But when you get to budget and pay yourself first and make sure your investments get paid and make sure you're working towards your funeral costs, your final expenses, then honestly, life is just so much more easier. You don't have any disruptions really. And that's where people need to get to. But it's the habits. It's the habits that we've kind of picked up on that kind of keep us back a bit. Yeah. So right? We got to look into that.
How hard is it? Because first of all, this is a big commitment for anybody that's, saying, you know what, I really want to do this. I'm trying to get myself out of debt. Those first 3, understanding your cash flow, eliminating your debt, and then setting up an emergency fund are you got to really be accountable to yourself first and then, to this commitment. How hard is that?
It can be hard. We first started with an activity when we're looking at your expenses. That's where we notice the most that people are really just spending. So, looking at your bank statements between, last 3 to 4 months really gives you an indication of where your money has been going. So once you can compile a list of needs versus wants, looking at all your transactions, seeing where they fall, and then asking yourself the things that are just wants. Are they necessary? Can I eliminate them? So that's where people have the most hardest time, because you have things like Uber Eats, you have your Netflix, and you have Amazon, and you have Hey You. So it's like we're not saying take away all of them. What we're saying is have maybe one subscriptions for movies or of that sort. Or, it's okay to have the Uber app, but then maybe budget for that meal so that you're not just, eating all the time unexpectedly. So those are some ways to go about it. But essentially, yeah, it's hard only when you are not committed to it. But I mean, if you have a good budget in place, as I said, one of the things I always do and I always say is you have to pay yourself first. Because it's not going to feel good if everything else gets paid and you're not even giving yourself at least $20 to do whatever you want, right? So that's one thing I highly recommend is that you get some money
True.
too.
And then talk to us about like a budget and how important budgeting is and then how do we budget? Because sometimes we're out here and we're like, you know what? You put this budget, like I do this to myself all the time. I'll put myself on this budget and then it's unrealistic. Like it's just like, it's not going to happen. Why am I doing this to myself? And then I fail at the budget. So how do we set a good budget?
Mhm. Wow. So essentially your budget
Hmm.
is your income, right? And it's just looking at the expenses you have and then just making sure that your income can pretty much cover your expenses. So I do offer free budget worksheets in my bio. And it's a very basic one, but it's just one to start with. And essentially it's very basic. It's like just, okay, it gives you options for two incomes coming in. And you're actually looking at the budget, like what did you budget and what did you actually spend? And that's huge because you can see the variation between, okay, I didn't actually spend all this money towards it. Why? But if you've been tracking your budget, you're going to see where all your money has been going to begin with. But I mean, if you are looking at all your expenses, like, okay, these are things that I have to pay for, and then this is my money coming in, I personally do not touch any money, pay for nothing until I look at my budget. Like I'm that, like I do not do nothing, absolutely zero. So that might be something that you might be forced to want to do where it doesn't matter what it is. If you have to go grocery shopping, it doesn't matter. I always say, okay, I look at my budget first, make sure everything gets paid first, and then whatever is left over, that will dictate between what I set aside in the budget, and it becomes real because you might have to cut things like your grocery bills, or if you had entertainment or even paying yourself, like you might find that if you went and made a purchase before checking your budget, well, that's the money that you budgeted for yourself. So realistically, you cut yourself short without saying first, oh my gosh, this is what I want to spend my money on. So it's absolutely hard, but I mean, it's so worth it. It's so there's and then you know what? If anything, I always go back to channeling and asking people, how would you feel when you accomplish this financial goal? What are some things do you think that you would do once you've done that? And then hold on to that feeling, right? And allow that to kind of take you through. Now, yes, of course, it's going to be hard if you do a goal for 18 months, or but then that's where you have to set smart goals where they're measurable. How much of that percentage have you allocated to that one budget line? How detrimental would it be for you to still be able to spend? So then that would not make it realistic, right? So it's really looking at how can this budget work for me without really providing any constraints. If I have a client and unfortunately the budget's so small, I won't even offer them insurance. I know it sounds really bad, but if you can't afford the insurance, that means you're down the line, you're probably not going to be able to pay for it. So this is where we have to be mindful about letting the client first really come to terms with the commitment that's at hand and asking them if they want it. Because at the end of the day, it's you saying no to yourself. It's not really me. But what I can tell you is it works. That feeling of, oh my God, I got rid of that one debt and I'm one step closer, to being financially free. Like there's nothing that trumps that. Nothing. Yes, Mwan Yam Doma Os and I can't,
Hmm.
but with all good due time, I will reach there. So
True.
yes.
My gosh, yes. So talk to us about living healthy in the mindset and then living healthy in real life. Because last week you were mentioning about how, both of them work in tandem. So talk to us a bit about it.
Mm-hmm. Yes, and I think that goes back to setting intentions, right? When you know what it is that you want to get done, that's what's going to keep you focused. That's essentially going to be your biggest why, right? I'm doing this intentionally because I want to make sure that my family eats, or I'm doing this intentionally because I want to give back to the community. That's your first intent. Then from that, it's okay, well, what is it that I want to do? And you break things
Right.
down into goals. So when things are down into goals, essentially you're just really working towards what is it that you have to get done next, you know? But if you don't have those in line, like whether you do it on a daily basis, whether you do it on a weekly basis, it's going to really be hard for you to keep moving forward. And hence the monthly budget, right? With a monthly budget, you're always constantly analyzing from a month to
Mm,
month basis. I do find that in the starting months, I would even say the first 3 months are your hardest months because there's still so much room to relapse and have to keep coming back and say, oh my gosh, I'm gonna try again this month. Oh my gosh, I'm gonna try again this month. But when you see the progress, and this is why it's so beautiful to have that document there, every time you're inputting these numbers, you can see the contributions that you've actually made to know that you're working towards something, right? So it's really a matter of just breaking things down and not feeling too overwhelmed either, really. Like you can achieve all of these things. Honestly, like these are all achievable things, even if you take yourself X amount of years. Every client is different. But that's why we say like you're just better off starting. You're better off starting just today, tomorrow, yesterday actually. Because really there is no better time for
right.
anybody to start building your financial freedom, and because anybody can do it. You could have built financial freedom 10 years ago and still been financially free. It's just a concept of just let's just get there. Once we get there, then we can start working on other things. But when you're focused on that mindset of wanting and doing and wanting and doing, and you're intentional and you're setting goals, that then becomes a habit. So you're no longer it's no longer just a healthy mindset, it's a lifestyle mindset. It just becomes natural to you. As I said, like it got to the point where I legit religiously don't do anything until I looked at my budget and I've made payments to my budget and I've dealt with that, then I'll go ahead and spend it. And Harpreet shared an amazing tip on her page last week, and basically what she was saying was when it comes to your expenses, identify what they are and calculate them for the past 3 4 months. Depending on the month that you use, how many months that you use, divide it by that number, and it'll give you an estimate of how much that bill would cost. Then what you want to do is set up automated payments for that number amount. But she also did say give yourself a 10%
I,
buffer. Give your 10% buffer on that. So automated payments are the best way as well to really help you. You see, our mind will tell us that yes, we need to make that payment, but needing to, knowing to, and doing
right.
are two different things. So setting up that automated payments would really help ensuring that we're staying in track online with the financial plan that we have in
Wow.
place.
Definitely important to think about for sure when it comes to the budget because that's the base. That's the base of it, right?
Mm-hmm. That is the glue. Even
Mm-hmm.
companies use it, right? And little funny story, I was taking special event
Mm-hmm.
operations, and that's when I was first introduced to the budget, doing a budget for an event, and I'm like, wait, what? Break even?
Yeah,
Lose? I was like, what? And then I was like, why don't they teach us this? Because at that time I was experiencing heavy, like sometimes my bills are paid, sometimes my bills are not paid, and then I'm living in, a home that I have utilities. So I understand we have to pay, but my first
right.
thought wasn't to pay bills. My first thought was yes to pay, but I do things first, then pay after. That's why I caught myself the problems. But I'm like, if I just have a budget and I put it in there and I pay it, and then even if I spend off whatever, at least I know my bills are paid. That was my first aha of like
Yeah,
stress being relieved off of my shoulders. Like I could be broke, but I know my bills are paid. I know nobody, is going to be sending me a next bill next month with the previous amount. Like, no, we're not doing any of that. So I reduced my stress. So, but I will struggle and budget everything else with whatever else left over. And that's what we talk about the cash flow, right? making sure that everything else is allocated, and then whatever is left over, then you determine what is it that you're going to use it on. And I like to do zero-based budgets. So meaning that my budget is down to the zero. Like my money has to go somewhere. So even if I'm paying myself, all bill, whatever it looks like, it's a zero-based budget. So my money's gone anywhere. There is no cash flow. It has to go somewhere.
Wow.
Yeah.
Wow. That's something to think about too. I've definitely implemented this Y ladder that you were talking about last week in so many different areas. You know, my kids are starting to be like, Mom, just relax. Like I already told you. And I'm like, no, we need to break it down. But that Y ladder is something else. It's such a good concept. Um, just explain it if you
Mm-hmm.
could for anybody that missed the show last week, just so that they could kind of get the gist of what that is.
Absolutely. And I think a perfect example of using the why ladder is when people say they don't
Hmm.
believe in insurance. You don't believe in insurance. Why? Oh, because I heard it doesn't pay out. But why? Yeah, this one person told me that it doesn't pay out. But why did you guys have that conversation? Oh, we're just talking about that one time that she got insurance.
Hmm.
Oh, but why? Oh, because her aunt is the one that does insurance. And then it might lead to like it might seem like it's a why, but then you can also turn it around and do more of a question approach, or oh, were you asked to do insurance? Yeah, but I don't believe in it, right? So then now it goes right back to them. But then why don't you believe in it? Oh, I feel like I'm putting too much money into it. But why do you feel like I'm putting too much money into it? Oh, because I have to pay it every month until I die. And then have you ever done the calculations for about 20, 30, $50 a month? Do you ever think that you're gonna actually be able to put in $1 million? Oh, I never thought of that. So really allowing somebody to explore their own reasoning behind the beliefs that they pretty much put a bias to without really doing their own research, because that's what society does. It feeds us a lot of this information. A lot of the reality that we see is not ours. So when you ask the why ladder, you're really challenging what's your truth in all of this, what's authentic to you about the situation, what do you believe in, have you done your research yet, what do
Hmm.
you stand for? And it really puts people into a mind of thought provoking, where they have to really say, why did I
Yeah.
think that way about insurance? And the good thing about it is to be able to tell stories that I've come across to really help them. Once again, yes, am I feeding into their belief
Yeah.
system? 100%. But then I'm giving them stories that are real live that I've actually experienced, whether a client has told me, or I'm having these group meetings and people are actually confiding in me and saying, yeah, that's happened to my family, and unfortunately we can't get this. So it's continued conversation when people are not in the room to let other people know how important it is to continue to keep questioning everything, even with investments. Like, I'm not against day trading. I'm just saying I can build businesses and invest into long-term endeavors without having to worry about what a day trade stock is going to do for me, right? It's just your perspective on why do you want to invest. If you're looking for instant money, that's the first problem, right? Because nothing when it comes to financial advising is
Hmm.
instant. Nothing. Everything needs to be long term. Everything needs to be thought out, because you are creating a plan where, one, they don't teach us about on purpose, because it is achievable, but it's also something that everybody can do, because once again, going back to the mindset, right? It's hard. It's going to break you. It's going to question you and ask you why you're doing this and not going out, or why you're not spending your money on Amazon, or why, it's just what it is. But the discipline of being able to set yourself up, it outweighs everything. We haven't been there, of course, we wouldn't know. But you mean you can ask anybody who's done this, or you can hear special coaches or people online that will tell you that it's essentially a sacrifice, and we've all
Yeah.
had to go through it. And not the end of the world, but it's absolutely something everybody can achieve. So
So important to ask those questions. That why ladder can be applied in any avenue of your life. Like you just keep asking the question,
mhm.
and until you get to the base, you've there's a lot of digging that can be
Yes,
done. It's a lot,
absolutely.
but that's
Yes,
key. That's a good one. Um, you also talk about setting goals a lot.
absolutely.
How do we set good goals? And then what are like some key things that we need to think about when we're setting goals?
hmm So using the SMART goals, of course, smart, measurable, achievable,
Yeah.
realistic, and timely. So if you're saying to yourself, okay, you know what, I want to start my financial goals, you have to be specific and say when. When exactly do you want to start that, right? So when you're setting that goal, you're asking that question when. When you're looking at measurable, saying, okay, starting your financial goal, is this possible? Looking at things like, do I have a steady income coming through? Am I able to use that to then bang out any debt that I may
Right.
potentially have? If you don't have any income coming in, then you need to perhaps switch that goal to strategizing on how can you bring in money now to then support you being able to create this new goal. Is it attainable? Is it achievable? So are we talking about getting rid of like $20,000 debt here? Or are we talking about getting rid of
Mm-hmm.
$100,000 debt? Like, do we need to be setting a budget, or do I need to be you referring me, for example, to Four Pillars, who does the consumer proposals? So that's being, understanding, is it achievable, in which way is it achievable, and understanding the longevity and the amount of debt that's there. Is it realistic? So is it something that you can actually do? Will it stop you, from being able to pay your monthly payments? Do you have, going back to income, a suitable job that's going to allow you to pay this bi-weekly, monthly? And then of course the last one, timely. Same thing. Is it something that I can do with a time allotted? So if you say a year,
Right.
18 months, 2 years, is this something that's going to be realistic for me to do in terms of getting my goal done? So you got to look at every angle. Even if you have children, asking yourself, um, is it achievable having them? Yes. Why? Because then I'm going to create a budget to ensure that money is going to be allocated just for that, and any additional expenses that come up. That's why I'll have an emergency fund set aside, so I don't have to worry about tipping out that money that's supposed to be going back towards my debt. So you have to look at all angles that was going to
Mm.
stop you from paying, and then making sure you get ahead of that so that you're able to then, pay off the debt that you need to. Or it doesn't even have to be debt. It could be saving money. It could be saving money
Right.
to purchase a home, and that's the thing. Like, a lot of us right now want to purchase home because it's been something that we want to do. But if we knew better, even
Yeah.
3 years ago, if we just started putting in money 3 years ago every single month, we'd be a lot closer
Yeah.
than to where we are right now. So that's, I try to really push that, because my goal, I have a declaration for this year to make $50,000, and that's for the down payment of my home. And it's the hardest thing that I've ever done. But I thought to myself, if I had done this 3 years ago and made this commitment, I could have had this money already, and I wouldn't have had so much stress and anxiety about really pinching my budget and watching my spending, because I would have had the room over that years to be more
Right.
flexible with my money. So
It's
yeah.
important, but like as you mentioned too, it's about making that commitment, and then when you make the commitment, being accountable for it. So, there's no time like
Mhm.
getting it done when you know you are actually going to stay committed to it, right? So, but goals are
Exactly.
crazy.
Exactly.
Goal setting, especially with these
Hmm.
SMART goals, are something that, I try to apply to different goals that I'm setting as well. But I mean, across the board, they are too something
Hmm.
that we can use when it comes to the financial. Um, but you do webinars, you do classes, you do, different segments.
Yeah.
So talk to us a bit about what you offer and then how anybody could sign up and all that good stuff.
Awesome. So I actually have a webinar coming up in June, which is, well, June's tomorrow. But it is so weird. It is so weird saying the last of the month and the first of the year. It's so weird. But that webinar is June 17th at 8 o'clock p.m. And it's pretty much everything that we discussed, but I just make sure that people understand that, like, this is what it takes to, build your financial freedom, the building blocks. This is essentially what it takes to build a legacy. Giving them I really break it down now, because obviously when you're learning, you're really just talking to what you're being trained, but the more and more you deep dive into this, you're like, no, 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 no. My thing is financial freedom, building wealth, because my people need to hear more about that. So we have that there, and then I have an 8-week course which is a waitlist course right now. It is free because it's almost like a focus group I'm doing. So I am waiting for a certain amount of participants before I actually run the course. The course is valued at about $1,000, but as I said, it is free right now just because it's a new course that I've populated and I want to make sure I get as much feedback as possible to really be able to run it sufficiently. So um, the 8 weeks, it's called the financial peak, so 8 weeks to financial freedom. And essentially I use a lot of mountain as my examples. So the peak would be the very top of the mountain where we talk about that financial freedom, getting to the top, and then heading on down to the next side of the mountain where we actually start building that legacy. So it's a lot more, easier to go down. Still have a little bit of hurdles, but it's not that much. And with the 8-week course, you get 2 workshops. So you get one in week 1, which is an introductory. So as we're speaking about this, we actually go through the activities. So I'll get you to do a needs versus wants assignment to really get an understanding of what that looks like. I'll get you to look at your bank statements for the past 3 to 4 months, looking at your transactions so you can understand how to, take yourself away from not having these expenses, and we'll plot it into your financial needs analysis so you can see the overall picture of what your finances looks like. Then in week 2, 3, and 4, I will do 10-minute consultative checkups to see how everything is going, if you're following your budget, if you have any questions. And then in week 5, we come back again to do a budget overview, because by then people would have had 4 weeks of using the budget. So if there's any questions, perhaps things that work best for them, asking me any questions, we go all over that. Week 6 and 7, you get 2 more consultative coaching, 10 minutes. I check in with you. And the very last one, we're pretty much doing a wrap up, conclusion to the program. And I do give out certificates for people's completion of, being able to take on it's essentially 2 months of that level of coaching, financial coaching. And then once you make it to the end, you get put into another raffle to get a next month worth of financial coaching. And I do believe that was the missing gap that I was experiencing earlier on as an advisor. Like, great, we'd meet with people, great, we'd give them FNAs, we do what we need for them, but it's like, how do I know they're working towards certain things? So I felt like having that course would really allow them to apply the skills, be familiar with the skills, and that they'd better be able to use it down the line to really, get their own financial goals done whenever they see fit.
That sounds super phenomenal. So June 17th, and then when does the 8-week course start?
So that one's a waitlisted program. So whenever I get the sufficient amount of participants that I want, then I'll go ahead and I'll let them know 4 weeks in advance that I'm going to go ahead and pump up this program and for everybody to get ready for it, and then get everybody to sign up once again to be like, yes, I'm confirming this spot, and we're going to go ahead and do so. And that would be the 2 that I have. And then I'm looking forward to, when I first started, I knew I wanted this, but I wasn't too sure how to go about it. But now I'm learning more. I am going to be doing, not anytime soon, but it's definitely going to be something next for my financial services. It's going to be one specifically for moms and and her children. Because really, like, we have a lot of responsibilities when we have children. We got to make sure that they're going to be looked after, like they're going to have the education they need to go to school if we're unfortunately not here. If we can help them purchase a home, the people that are going to care for them. We need to set up, we don't, like, if we just pass away, unfortunately, and you have children, you've literally just left the onus for somebody else to pick up your pieces. Like, there's, you can say, like, nobody's not designated to take care of your children. If you have a loving family and they want to care for your children, they can. But if they don't feel like they want to, then your children go to the state, right? Like, it's just, we're just not mindful of what happens after death, unfortunately, and we can really set them up. As I said, you're worth more dead than you are alive. If you have $1 million tax-free coming to you, and you have children and you have a will, then you set out that will in a way whether you want them to have money by the time they're 18, you want a policy for them, whatever. That's literally your gift to them, if anything. That's how you can kind of look at it, right? But they get to at least be able to then start a life where they may not have to worry about how they're going to school or how they're going to purchase their home or how to start a job. Because we don't realize either, too, that this money can also be used for that as well, to help them start a job. So life insurance, just going over the two. So you actually have three. So you have one term and then two permanent. So the term, you can do term years for 10, 20, 30, 100. But once again, essentially, you're just renting. You do not own these policies. If you have a 20-year term and it expires on you and say you're 30, you're going to get rated at the age of 30. If your insurance expires on you at the age of 50, you're going to get rated for 50 and it's going to be exceptionally high because once again, your renewal is based on age. The older you are, the more at risk you are because now you're more prone for more conditions, diseases, even closer to death. So these are things that are taken into consideration. Term is not a bad thing to start off on, especially if you're just starting up. But obviously, as your expenses get better and your finances get better, then you can upgrade. So we do have term insurance that is convertible into a permanent, and essentially what that means if I was to contract any condition, I would never have to do a medical. They can't deny me any permanent, and then I'd be able to convert it over to permanent. Now, when it comes to permanent, permanent has cash value attached to it. So that's the bonus nobody really talks about because you can use your investments from the insurance as collateral, right? So you have whole life and you have universal life. Whole life is not as transparent as universal life. And what I mean by that is you don't see where your money is going. Like you can't tell how much is going to investment or how much is actually paying into a policy. But there is cash value still attached to that one specifically. So there's no flexibility, there's no holiday pay. So now moving over to universal life, when it comes to universal life, if for whatever reason you're unable to pay that policy, there is a holiday pay, meaning that you have the opportunity for the insurance company to cover expenses, say if you got sick, if you got ill, whatever the case may be. And these policies also have living benefits. So if something was to happen to you while you are alive, you could potentially use money from that policy to have expenses to look after yourself while you're still alive. And of course, it has the death benefit attached to it as well. But these policies are what the wealthy people use. They use the universal life policies because universal life policies can essentially, that's the one that can live on. They can, so with insurance policies, you can have riders attached to them. So you can still have a term policy and a permanent policy all into one. And that's why we're trying to say everybody's needs are different. I could be a mom with four, I can have term, I can have permanent, but my term, for example, if my children now are 16, my youngest one is 10, I might have another term policy for as old as my child becomes an adult because he's my responsibility and that's just a responsibility that I have that I really need to make sure that anything was to happen, he's covered. But then if I have a permanent policy now where the cash value is growing on it, if he turns, just hypothetically speaking, 18 and we had like, what, 10 years, that will drop off. And also essentially what means is your insurance gets cheaper. So insurance is really only needed in as you're younger because you have more responsibilities. You have children, you have mortgage, you have car payments, you have children's education. But as you get older, what's typically supposed to happen is those responsibilities drop and your assets are supposed to increase. But that doesn't typically tend to happen, unfortunately, because we do things like refinance our home. We want to go buy bigger homes. We go on vacations and we still don't have our debt paid off. We buy all these cars. So we're really just playing tug of war between all these liabilities and still paying for this insurance because we're still holding on to responsibilities. So it's, as I said, insurance is only needed earlier on. That's it. As you get older, you have assets that will really cover a lot of different things, or you would have built it. So when you also pass away, you have final expenses they don't tell you about. Somebody in your family still has to file your taxes, you have probate fees, then you have your funeral expenses. So, when people are not thinking about them passing away, they don't realize this is why they say there's generational poverty and not generational wealth. Because with generational wealth, you leave money for your family. You literally said, I love you. I'm not leaving with my expenses. If I pass away, somebody's going to inherit my debt, unfortunately. It could be my children, it could be my parents, but somebody's got to take it. It's still a debt that's owed. So it gets transferred to somebody else in your family. People don't talk about that either, right? But essentially somebody has to pay for it. So if you have life insurance, it can cover those costs as well. And if you have funeral expenses and you don't have any money put aside, then your family loves you. They're gonna go find the money, which means that you've just put your family in more debt
Yeah.
when they didn't have the money to begin with. So as we talk about removing ourselves from
Yeah.
generational poverty.
Because this is a conversation that, especially as Black people, we're not raised to get life insurance. It's not really something that, your parents, well, I know for sure my parents didn't raise me to get life
Yeah,
insurance, you know what I mean? Um,
I do.
how
Mm-hmm.
how are we, like, how do we change that? I guess you're teaching people about generational wealth and how important it is, but
Mm-hmm.
for those older heads, what's some key information that we can give them so that don't I know what I had to pay 144,000 in death taxes for my father. That's a lot.
See? And who is
That's
that?
Michelle.
Yeah. It we at 144,000. Oh my gosh. I don't even know where to begin start. I wouldn't even have it, Lord. Like I just wouldn't. And so when to your point, it's things like this. I hold on to things like when I see this and say, I wasn't alive. Somebody shared how when their father passed away, they had to pay 144,000. This is the most I've ever seen in his taxes. The most. That's the most that she's topped it. I've never seen that much. I've heard stories of what's more coming to the surface is I do have Black families confiding me and telling me that their family member has passed away and they've all had to come together and pool money together. And that's really like hurt the family because, as I said, nobody had it to begin with. So I share stories like that. But I haven't met anybody yet that's actually told me, yeah, the passing on of taxes is actually true because it is the government. So when somebody passes away, the first thing the government does when they realize that that person is gone, they freeze your assets. So that's why a will is so important, because if you have an executor in charge, they can be the one to handle all the affairs. Look at Chadwick Boseman. That was a perfect example. A man who's an actor, has money, didn't have a will, and his wife had to go to the courts. When you don't have a will, your partner has to go to the courts and then fight for your estate, or your estate then becomes a part of the government. And that's why where a lot of people, when they don't have things, the government is a lot richer than we think, because it's if people are passing away and they have assets and there's nobody to pass it on to, government gets richer. Same thing with bank accounts. If you don't have access to your people in bank account, that's another way that banks get richer. You can't prove that you have access to that.
Wow.
It's a cut wrench industry, especially when you pass away. And funeral homes, they're private, so they're not run by the government or funded by the government. Meaning that's why, we do have Everest. So Everest allows you to have funeral concierge service. So it does provide you with Tenzing, which is almost similar to iCloud. So you can store your stuff in there. You can store all your passwords for your social medias, for your bank accounts, whatever. You can upload pictures in there if you want certain pictures. You can plan your whole funeral. They will go and negotiate the same rate that you would have received if you were alive now that you've passed, because that's why you see people go and they purchase their casket or they purchase their land in advance, because it's cheaper versus when you pass away, they know your family's in a crisis, so they get to jack up the prices. That's how they profit, really. Because even my boss the other day told me, he's like, when he went through his whole order with his parents, he said him and his wife, they were at the grave site, they went to inquire about the lot, they paid for the piece of lot $1,800. He said, I didn't know it was going to be so cheap. I said, yeah, a lot of us don't know how cheap it is just to buy yourself a spot to die. Versus then you not passing away and guarantee they could probably charge you for all $5,000. But that's just how they operate. It's a money eat world out here, especially when you pass away, because once again, you're worth more dead than you are alive.
Sad, eh? Jeez. My gosh.
Right. But I know all about insurance, 100% correct. Yeah, insurance is definitely there to help us do a lot. Actually, it was more than that, but it was insane.
Heck,
Oh
that's a
dear.
lot. That's a lot of
Yeah.
money. And these are the talks that we don't
Hmm.
get. We just know that after somebody passes away, it's hard, but we don't know what that means. You know what I mean? Nobody's ever really talked to us about it. So we don't know. We don't
Correct.
know.
Yep.
Jeez. Wow.
Absolutely. Absolutely.
So you guys are aiming, or you specifically, I know, working with the team, you guys are aiming to bridge the gap between generational poverty and generational wealth. So talk to us about
Mhm.
how you could bridge that gap.
Yes. So my background is in education. So for me, it's just providing these webinars, but being, once again, go back to the intentional part of things, really being able to break it down so that people do understand what the term means, what's the difference between the two, understanding that it's a two-step process because it's the, I need to get financially free first. So that's to have little to no debt. You have your savings, your emergency fund is there. You start to invest, you can freely get up, you can go to the store, you can buy whatever you want and not have to worry about, oh my gosh, what's my budget, whatever the case may be. And then you have the gap to get into the to leaving a legacy. So it's really just education. Honestly, that's the most we can do. Is try to bridge. See, that's the thing. We know that the gap is not having access to education, but now that individuals are getting access to education, they're still not receiving it as such. So for me personally, is understanding that the real gap is them not knowing that they need me. So it's my job to go out there and be in people's DMs and constantly invite them out to these webinars. And because it's not what's taught, it's what's caught. And until you're in that room hearing about these concepts in a way, not your traditional, advisor, these, white man just talking out the wazoos. Here we have a black single mother who's actually applying the same steps that I was taught to teach you in my personal life. So I'm telling you it works. I'm telling you to sacrifice. I'm telling you it's going to be hard. I'm telling you it's not going to be easy. But what I'm telling you is that you have a coach, you have somebody that can really be by your side to push you to get to the next level, who understands that we have days and that you have to be kind to yourself. And that when you're ready, you can pick yourself right back up and start
Right.
all over again. So that's what it really boils down to. But it's also, see, it's the mindset. Going back to what you asked me earlier, right? It's like the real gap is getting into people's mindset and getting them to understand the benefits of it because they've created their own bias around it. So
Yeah,
yeah.
definitely, definitely. And I like what you had said there about it's not what's taught, but what's caught, because you can teach, 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 but then that one thing will be like, wait a minute, let me rewind that. What did she just say? Like, yeah. So,
Yeah,
mhm.
yeah, definitely. Hearing finance for the first time, it was so foreign to me. I had to listen in on those trainings for a while. Like before me to even be able to just freely talk about the two, because with my coach too, she helped a lot. Like she was like, okay, great, that's great. You want to help people build wealth, but what differentiates you? And I'm like, wait, what? And then that's where it made me realize that for me, yes, I'm a wealth builder, but then I come with the webinars as the education piece. I come with the financial peak to really like teach me what it takes to be financially free, trying to separate myself from just saying I'm an advisor. Like if you hear me, you hear my name, I want you to think, yeah, that's Nikki, that's the wealth builder. You go to her when you're ready to just start your financial journey. Because we know it ain't easy, we didn't come here for, things to be instant. So when you see me, we're about to put in some work. That's how I like to see it. Like I just work,
Yeah,
so
well, you're
work.
not only just
So
finances, man, Nikki, you are out here doing fitness. You're out here like this is Canva plus right here, teaching us about what needs to be done on Instagram, this, that. So you are definitely you set yourself up aside from just a financial advisor. You are more than just that, girl.
right? And I mean, it's just really built off of what I've gone through. I'm just like, if anybody else can benefit from something that I've gone through that they don't need to go through, I'd rather you just hear it from me, whether you use it or not. But you can't say nobody told you about it because I was, I ran to tell you because I really believe in you doing better for yourself and not going through what I had to go through. So, and I just had a conversation with this today with a doctor at the, I work at George Brown as well. So I work at George Brown as an assistant. I do orientation and transition events. So a lot of my expertise came from George Brown, the facilitation, presentation, all that good stuff. and then teaching, of course. Good night. But essentially with that, I was speaking with one of the professors today who wants to have me as a guest speaker, but she's just like, you're different. She's like, you're intuitive. And I said, I am. But you see, when you look back at your life, you don't realize how, like, my whole life is built off of intuition. My whole life has been built off of manifestation. And I just didn't know it until there's something that happened in this month that I'm just like, people, if I tell you the power of writing your things down and just seeing to it, listen, believe me when I say it's yours. It's already yours. If you said it, it's yours. It's just a matter of the only thing that's missing is the action. You just gotta do the work. That's it. But if you say you want it and you set those SMART goals and you're intentional about it, you're gonna get it done. It's gonna happen. How would God not do that for you? Make you see something, want something, and then work towards it and not give in to you. And even if he gives it to you and it doesn't work out to what your standards are, to what your liking was, it was still a part of the plan. There's still something for you to learn in it. So that's why it's just so important just to go with whatever it is that you're supposed to do. And yeah, pay attention to your intuition, but this is crazy. I don't know what he's doing over here, but I'm just like, okay, I just want to take a break in July. Is that possible? Because I know I've been telling you
July just around the corner, eh? It's like May came in and it's gone. Now tomorrow's June. July's going to be next week.
Whatever gets done in this season, that is it. Because I need to take a break for whatever's coming in September, because that's a whole next, project that I want to do. I want to really be able to it's going to be a nice project. But I've experienced, my biggest thing is that, budgeting is great. You also have to budget for other things. Like you'll budget your meal preps. You make sure your meal prep is done so the food stretches. If you have to go to the food bank, you go to the food bank. So I was doing that, and then I just got annoyed. I'm tired of the people that dry up beans. I don't know how to cook the lentils. Like, I don't know half the things you guys are giving me. I don't know. And I got to the point where I'm like, you know what? I'm going to get through this. And then come September, I'm going to start a food drive from September to November. And for December and January, I'm just going to give back to single moms. Because those are the two worst months for me. Like, I don't even know how I'm still standing. I swear I'm supposed to lose everything. You guys have no idea, because it's being in finances that saved me. If I didn't understand certain things, like, I'll say that I'm broke, but the difference between now and last year is that I have an investment. So at least I know now that I've contributed to that ongoing commitment, to know that that's there. And regardless of what happens, that will always be there for me. You know what I'm trying to say? So that's there. But then I have an emergency fund. So then it's like, okay, I'm also been in the emergency fund now. So I have that there. So it's like, when my checking account is zero, I'm still broke, and I'm going to keep that mentality. That's the mentality I am going to keep, because I don't want to divert back to my old ways of even when you see money in your savings account, you have money. No, I don't have no money. I don't have no money. None. We going. Kids would be like, are we going to go shopping today? Like, no, I don't get paid till Thursday. Shoot, I don't care. Go find something. That's when we can go down to the last in the cupboard. Yeah. We're not playing around in this season. I don't care. And I will never forget. I promise myself I will never forget this season, because it's not like I haven't lived it before. When you have the kids so young, that really not knowing how to feed them, all these memories sort of started hitting me. I'm like, we're good. We're good. You know what I mean? Because even if I don't eat, y'all willing to eat whatever's at the top of that cupboard. So I'm good. If I have to go have tea to bust my gas, we're good. But this is the last time. Like, because what I'm now building, essentially why I'm so broke, is because I'm saving for the house, right? Putting $50,000 into 1 year. I don't know why I did that, but I will absolutely be encouraging my clients. Listen, if you are in no rush and you would like to buy a house within the next 2 to 3 years, let's do this. Let's just start putting some money aside, because 1 year is possible, but it's, child, it's a lot.
Yes. No, but you're talking some facts though. Sometimes we look at our finances and we're like, I could just dip in here and go and spend. But you are thinking smart, because we don't always need to go and put out the money. when we have stuff at home, we're kind of wasteful sometimes. We can be. We need to be thinking smart about how to utilize what we have already and not just go out there and
Yeah.
dish out the money just because we want. It's then putting needs over wants. So it's so true. So true.
Yeah. Yeah, definitely. And to be more specific, that food drive I'm doing, it's a Caribbean food drive. Like I need to see, like, why can't we have a nice food bank? You know what it was? I did receive, and I don't remember when I filled out that form. It was from
Okay.
African
Okay.
Basket, I think. And
Yeah.
there was the sheen.
Yeah.
There was the sheen in the box and
Yeah.
plantain in the box. So big them up because that's what we need to see more for our culture. Like, why do we have to be subjected to what the food bank
Yeah. Yeah.
traditions are? Right? I'm tired of it. And that's not helping us when
Mm.
we're not used to that. There's a difference between being able to eat and knowing what we can prepare versus just
Yeah.
anything you guys fling at us. I just cannot. But to see that Sheena, I was like, you know what? That's what I'm gonna do. That's what I'm gonna focus on, doing that food drive where I'm taking in food, I'm
Yeah.
taking in donations. Um, because single moms, man, and honestly, when we come out of
Yeah.
COVID, it's just gonna be worse. It's just we're already saying that middle class, it's 135,000. That's what you're looking at middle class to be. 135,000 a year. How does one Like, how do you? That's a two-person home, but why is a two-person home one hundred and
And
thirty-five
not
thousand
even the
dollars?
average two-person home is $135,000. That's a lot of, that's 70,000 basically each. That's not average. That's not average.
Yep,
So
yep,
that's
yep,
crazy.
yeah. We're gonna see some
Yeah.
different times in the next coming months. Like, we're gonna get out of COVID, but we're gonna see again is around not the beginning of fall, but something's gonna happen again in between the fall going into the ending of the year. Um, and hoping that's going to be the last of it. But remember, people still gotta, because COVID came back around once, right?
Yeah.
Christmas.
Yeah.
Yep. Another Christmas. There's going to be a lot of people. I'm telling you, there's going to be a lot of people who's going to be struggling. Because you have that, even though, like, for me, I want to get away from this traditional, like, spending holidays. So that's another thing, too. Be mindful of these holidays that entice us to spend money, right? And going back to your belief system and understanding, why is this a holiday, or why is this something that the world celebrates and allows us to spend money on? And it's not to say that you don't indulge, because that's what happens as parents. We know that we budgeted for X amount of dollars
Yeah.
come December, and we're still
Yeah.
buying, oh my God, that last Christmas present, oh my God, that last whatever. And by the time we look, we've literally spent
Yeah.
every damn dollar, and then we go into the new year
Yeah.
with nothing.
Yeah. Yeah. Too many times.
I I can't. I don't want to. I'm not doing it anymore. I refuse. I'm not doing it
Yeah.
anymore. I'm over it. Mm-mm. I'm writing my story. I'm not. No, I told
Yeah.
God, I'm not. Nope. Count me out. Let me show people how to do it instead, but count me out. I'm
No, I
good.
hear you. I hear
I've
that.
had my fair.
It's enough is enough, you know. You just got to take take control of what you can manage, and that's it. And when we really think about all the
Mm-hmm.
gifts, not the gifts, but the things that we provide for our children all year, and then Christmas time and birthdays, we spend that extra. It's a lot. It can be a lot, and we just want to do
Yeah.
more because you want that, you want to see their face, the happiness when they wake up and they get what they're looking for or whatever, but they don't know the pocket is done, like it's empty, right? So,
Literally,
jeez.
literally.
Well,
So,
thank you, Nikki, for coming on and sharing all your good stuff with us. I appreciate you. But before I let you go, of course, I want a motivational quote if you have one, a different one that you would like to
mm,
share with us.
it's funny. The one I gave you last week was like my standard one, but I did a quote today, and what was it? But I did it on my coaching page, but I said, if you don't come from a rich family must come from you. And I don't want people to get the confusion between rich, realizing I create happiness. So rich in abundance, rich in love, rich in wealth. If we've never had the opportunity before to really be loved on, then love others. If we never had the opportunity to come from a family of money, then be the one to create that. So really doing what we were never exposed to doing, but understand the benefit in doing so to have a better future or to become your
Mm.
best self. So
Super
yeah.
powerful as always. Thank you so much. We're definitely going to make sure that we check out that budget. You got a budget free sheet in your
Yes,
bio.
work, and it's fillable too, so you can work right in the
Yeah.
document if you want, or feel free to. I do want to somehow look into making it more of a. It doesn't accumulate on its own, but it is fillable. But it's a very basic one. It's literally something that you can just look at and say, these are my expenses, these are my savings, this is my income. How much am I supposed to actually budget for? What did I actually spend? And just give you a nice sum up of, ooh, when you see that, why do I have more? Okay, cool.
All right.
Yeah. That's when you want to call me and you want to be like, can we fix? I'm gonna say
All
absolutely.
right. Okay. So we'll definitely link up soon. We'll be in touch anyways, but stay good. Have a great night. And I appreciate you,
Thank
girl.
you.
All right. All right.
Yeah.
Take
Okay.
care.
Bye
Have a good
bye.
one. All right.
Same to you.
Whew, okay, lots to think about, guys, on our financial journey, right? It's important to think about our finances. Finances are basically everything. We need to make sure that we are organizing ourselves, get on that budget, save that money, set those good goals because there's a lot of goals that we need to make sure that we're setting so that they, first of all, have to make sense. Secondly, they have to go with your budget, right? So check out Nikki's budget information in her link in her bio. She's got something coming up on June 17th, so you definitely want to be a part of that. Make sure that you guys get in touch with her. You could reach out Miss Nikki underscore nicey bless, or it's Higher Heights EXP, I believe. So make sure that you are looking her up on Instagram, okay? Check her out, send a message, let her know you're interested in, organizing your finances. She'll take you through an analysis to hook you up so that you know what you're working with, and then she will coach you. She's not only good in finances, like she has, if you're looking to build a business, you're looking to do whatever you're looking to do, she's got some sort of information to help you. And even if she doesn't have all of the answers, she has somebody that can give you the answers, or she's going to go and find it herself and then provide you with the answers. I'm telling you, she's a fountain of information. So you guys definitely want to check her out. Support her. Check out the Instagram videos that she does. She's always dropping major tips on how you can stay accountable, how you can stay committed to your goals, different types of information you need to make sure that you are living your best life. Right? So, especially when it comes to financial literacy, we've got to make sure that we are educating ourselves in order to educate who's coming after us, our children, our grandchildren, great grandchildren, all that good stuff, because we want to make sure that we're passing down that generational wealth and not that poverty. All right. So it's Higher Heights EXP. That's what I thought. Yes. So make sure that you guys check her out. Okay. Message her, download that budget form, hit her up, let her know how you're doing, and then call her, ask her for help. She's there, she's willing to help you out on whatever your needs are. All right, financial and then some. Okay. All right, guys. Thank you guys for hooking up with me tonight. I appreciate your energy. I appreciate you guys. I've got a lot coming up with the summer summit. So I'm going to be putting out a post soon enough. You guys are going to see all the great stuff that we have going on for the summer summit. So I already have some people that are signed up for the summer summit already. If you know any youth between the ages of 8 and 19 who have a business, they're looking to become an entrepreneur, they're doing something, we're going to have a youth segment on the next summit. So make sure you reach out to me, reach out to them, let them know, have a parent or guardian for any of the younger ones. Reach out to me. Anybody over 16, they're more than welcome to join the platform. Any performers that you guys know that you think would be a great fit to put on the summit, just reach out to me, let me know about it. We also are launching the very first online marketplace for the summit. So the online marketplace is going to be August 18th to 20th, and then the summit is going to be on the Saturday the 21st. So I'm super excited about this. You guys are going to see the post coming through. So again, if you have anybody that you think would be great to put on, that you think that they might want to jump on, make sure you guys hit me up. Let me know any advertisers, commercials, all that good stuff. All right, guys. And of course, I'm excited about next week. We have another fabulous guest. So thank you guys for joining me on What's the 411, where I have a new slogan. It is, what's my new slogan now? I almost forgot. What's the 411, where everybody's story matters. Okay, guys, so everybody's story, this is what we're here to talk about, how interesting, inspiring, motivating, intriguing everybody is as an individual, and we want to bring them all to What's the 411 so we could be motivated by their stories. We could hear their stories, we could learn from their stories, and we could build ourselves up while communicating, connecting, and supporting one another. All right, so everybody's story matters here. Make sure if you know anybody that wants to share their story, you hit me up. All right, guys, have yourself a fabulous week. Tomorrow is June 1st. Happy new month. And you know what June 1st means? That we've already crushed the first half of the year. Crushed the first half of the year. Okay? I'm telling you, yes, everyone's story matters. Every piece of your story matters. All right? From the beginning all the way to the end. Every little bit of it, guys. All right? So tomorrow is the first half, like literally in a couple hours, the first half of this year is going to be over, and it's the second half of the year. So make sure that you pull up your socks, get your budget in order, because I'm about to get my budget in order, and let's make some smart goals, guys, and smash it out for the rest of the year. All right? I'll see you next week.